What's good, YouTube? Let's talk about the most recent news about the upcoming stimulus checks that may or may not go through. We don't know if that we don't know if they're gonna go through or not. Well, first off, if you don't know, Trump is considering doing $2,000 stimulus checks for everyone who isn't a high income earner for the tariffs. He's calling it a tariff dividend. Some people are saying he's, issuing the stimulus check because the economy is sucking, which a lot of people have been getting laid off. They haven't been able to find jobs. A lot of the younger generation can't buy homes, so the economy is really tough right now. So they're trying to alleviate some of the economic pressure with $2,000 stimulus checks. We don't know if this will go through or not, because Scott Bessent has already been trying to walk back this news, saying that it could come through. It could come in various ways of like tax cuts and no tax on tips and stuff like that. So they're trying to walk it back. But if Trump is talking about it publicly, it's because he wants to do this. And whether it passes or not, we won't know until it happens. But the most important thing is that you should start pricing in the potential that this actually happens. So let's take a look at what happened last time we got checks. Okay, here's the timeline. So in January, there was the announcement. Biden publicly unveiled that the American Rescue Plan, which included 1,400 direct deposit payments, were coming. So we were first aware of it in January. It got approved in February. Well, it had House approval in February, Senate approval March 6th, final House March 10th, signed into law the 11th. Direct deposits were hitting the 13th and 14th of March. Okay, so that was a 3-month time frame. So that should tells you that we have a runway of at least 3 months right now. Trump has made the announcement. We don't know if this is going to happen or not, but if it does happen, you should be asking yourself, where is that money going to go once people get it? Because the exact same thing is going to happen if it happens. If we do get the checks, what's going to happen? The money is going to flow straight back into the markets, straight back into speculative assets, straight back into risk on assets, just like it did the first time. That's exactly what happened the first time. So if you want to potentially position yourself, NFA, not financial advice, I'm just saying, take this into consideration as a trader, because once we know, the market will start pricing that in. People will start buying up assets like crazy in anticipation, basically expecting all this money to flow into the markets just like it did last time. The edge is in the uncertainty. You must always remember that. The edge is in the uncertainty. The edge is in the uncertainty. The edge is in the uncertainty. Okay, that's how the markets work. Once we actually know something is true, the markets start pricing it in. When we don't know, the market's like, it could happen or it couldn't happen. We don't really know yet. The stock market is always pricing this stuff in immediately. Crypto is not so much. It's not so much. Like Bitcoin is off of its lows out of the 100K. We're going to take a look at the markets in a minute, but please remember that, okay? Let's take a look at the markets. Okay, so Bitcoin is off of its lows after retesting this 100K level. Believe it or not, I had an entry exactly at 100K, but I actually cut it and closed it because Tether is in an uptrend, and I was really skeptical at whether or not Bitcoin could continue and recover after retesting this level so many times. But lo and behold, it retested it and it started to rally. Right now, it's retesting the October 17th daily close, which is this candle right here. And as of right now, it's been unable to break that level. So I would assume that we could possibly continue to push up and restart to retest this level right here. But, it is really going to depend on what this week of news presents to the traders in the market. But structurally, it's bearish right now. It's below that 200 period moving average. It's below the short-term moving average, which is the 10 and 20. So structurally, it's bearish. And if this news continue to play out, then we know that the market will continue to break out and retest this level and continue upward. The stock market, had an absolutely insane candle on Friday where the market pushed all the way down and rallied all the way back up. Tapped into this demand zone right here, so it pushed all the way down and came all the way back up, which is just, it was a crazy day. It was an absolutely crazy day. Everyone who was taking break and retest trades right here got liquidated on this event right here, and the market just took all their orders and pushed it all the way back up. Shouldn't be here on this time frame. It's something that I'm looking for on an intraday time frame, but I have this level right here because this is where I assumed anyone who took shorts on this day, this is where their stop loss is, so they should be probably going to be getting squeezed come tomorrow with this enormous bullish engulfing candle that happened, which is about what, 80-90 pips. So yeah, so they're going to get the squeeze put on them, and you know, it's hard to bet on something that's been going up dramatically, like just straight up. When's the last time SPY tested a 200 period moving average? In May. So like, this is an enormously strong bullish uptrend. So try not to bet against something that's just long term going up, guys. Like, this is just insane. So the dollar right now is showing a little bit of weakness as it's retesting its 200 period moving average as well. And Tether also looks similar like this, which is why I didn't want to hold any longs on Bitcoin, because if the market is looking bullish, doing break and retest and holding the short-term moving averages to 10 and 20, then it's hard to want to fight that trend. You know what I mean? Like, currently the dollar is in an uptrend. Currently Bitcoin's in a downtrend, so typically you would want to follow the trend and not try to fade that move. You would probably even want to be looking for shorts around the 200 period moving average on Bitcoin. It's something I'm considering. That's why I have a notification, an alert right here. Something I'm considering because it is still structurally bearish, and we do have all the bag holders over here who could be underwater, who might want to cut their position on this rally, because the very fact that Bitcoin broke this level shows that there's a level of weakness in the market. Gold is looking absolutely ridiculous, like looking absolutely phenomenal. I mean, it's looking crazy. The next gold trade is clear as day. We're probably going to wait for a retest of this $4,000 level. It's a pretty good level, and I mean, as good as it could get when the market is going just straight up like this. Like, the fact that it gave us any type of structure is a great thing, so we know that other traders will probably be looking for long somewhere in this area. So that's definitely what I'm looking for, is like a retracement back to this level. Nice little pullback, take it, pull back, then take it back up. Boom. That's what we're looking for on gold. And for the long term perspective is that if the stimulus checks do come in, like, look what happened last time in 2021. The stimulus checks came in March, right? So March of 2021 was this top right here. All the stimulus checks came into the market, and that was actually the top short term. And then we had this nice pullback, and then everyone got shaken out of their positions, and we went into a consolidation for about 2 months, 63 days. So we went into a 63-day consolidation, and eventually we broke out, and then the bull run continued, and then it was pretty much over after that short-term run. We hit that double top right there, and it was over with. So, you know, past performance is not indicative of future results. We already know that. We know that the market is not always going to do what it did the last time, because there's always various factors that come into play that always makes the market different. But we do know that it's usually the top. Once we price something in, it's usually the top. Like, once we got the announcement of the stimulus checks, the market was already in a crazy rally from October of that 2020. Like, it was already going parabolic, going up December, and then we got the news of the checks, and then we really started pricing that stuff, and like, we started getting really big candles, really big pushes. And then once all the liquidity actually came into the market, we went into a range, and then the market broke down. And then we reaccumulated all those orders, retested 30K, rallied, and pushed back up. And then once we flipped bearish again on the short-term moving averages, flipped that 200 period moving average, it was over. It was over. The bull market was over. So let's briefly take a look at what happened with the stock market during that period as well. So the stock market actually did something very, very, very much different. So the stock market was in this rally as well. 2020 January, we got the notification. So somewhere around here, we got the notification. The market continued to push up. And March, the money injected into the stock market, and it just kept going. It just kept going. There was no bear market. We had a short term correction during this time period in September, and then the market just kept going. And then we had the heinous sell-off of, was that 2022, that it was pretty much a bear market that year. So we double topped in April. So we had a whole nother year of prosperity in the stock market. This is why I always tell people to like learn how to trade multiple markets and learn how to diversify, because we don't know where crypto has much shorter cycles than the stock market, because the stock market is super massive, way, way, way bigger than the crypto. So there's much more money, and it's much more accessible and available to people. So we had this year that was a sell-off, but like we had a whole year of prosperity in the stock market before we actually recovered in 2023, and it started this absolutely monumental run that we're on now. So, you know, past performance isn't indicative of future results, but if the money from everyone who's getting this money, if it does hit, you know, it's most likely going to continue to push the stock market up even more. So it's like long term, you should still continue to be bullish, because we know where the money we know where the money is going to flow. It's just going to flow back to the people who own the assets. It's just like Gary Stevens said, like, you know, the people who got the richest during the pandemic were the billionaires who owned these businesses and these assets that people paid money to have, you know what I mean? So I just wanted to put that news on your radar, so you can begin to position yourself for the upcoming months, the first quarter of the year, to think about how to position yourself and how you want to be positioned in the market, because it's time in the market, not timing the market. Time in the market. That's how you get your experience in. All right. We're going to talk some more about this in the coming months. Please consider joining the school if you want to be around other traders, like-minded individuals. A lot of alpha going on there, a lot of value there. We got the weekly calls going on. Man, I love it. I'm loving what's going on over there. So I'm going to see y'all in the next one. Trader Sage out.